Bitcoin emergency update. We're likely to see a nice price surge over the next 4 to 5 days. $22,000 mark is really, really important. And today I'm going to show you why from a technical perspective. If you like today's content, like, subscribe, hit the bell notification. We're here to make money from the markets, stack the odds in our favor, and ride those trends. So let's dive straight into Bitcoin. So when we're looking at a price chart with Bitcoin, it's making some very nice recent patterns. We always want to know markets moving fives and threes. And when we can spot those patterns ahead of time, we can make some really good money from the market. So we've had this nice surge up. This was a CPI, a nice impulsive move, a nice three-wave correction. Remember, fives and threes. We had a nice 1, 2, 3, 4, 5 of a 3. That's another 5. We've had another 3 correction of a 4. And now it looks like we're going to have this nice surge at the moment. So I'm actually long on Bitcoin in terms of where we're betting on the market going up. And I'm going to go into some technical detail on why 22,000 is really important. And the 8th of November. 8th of November is also really important as a date. By the way, if you want access to this chart, you can now download it for free in the description link below. I've got quite a few charts, one of which is Bitcoin. You'll get the actual chart itself. You'll get the 4-screen layout, so it'll look like this. So we look at the weekly in the top left, and then the daily, which is what we're focused on today, and some of the lower degree timeframes. You can then upload it yourself into your own trading view and edit as you see fit. So with Bitcoin, right, there's a couple of things. I'm long on this at the moment. I went long on so by the time you're seeing this, price might be wherever it's going to be, right? We got a non-farm payroll today as well, which is the jobs announcements. But I'm long on this 1 bar high with a stop loss down here. Very tight stop loss. So what you want to know when you're using stop losses, and if you're used to using stop losses, is you place it at a point which will invalidate your assumption of the market. So my assumption of the market is we got a nice A, B, C, or wave 4 correction. I put a nice question mark here just to say, look, we don't know for sure. We would like to see the price go above here. That will give us some confirmation. But ultimately, the price going above here will give us the confirmation that this wave 4 is likely to hold. Really, really important. I'm going to talk about some other wave 4 factors. So I'm watching the price go up because we're long on this, which is great. I've got a particular price target where we'll move our stop loss to risk-free. And then whatever happens with the rest of the day, we'll be in a guaranteed risk-free trade. And hopefully we'll make some nice profits on this. So a couple of things. My absolute favorite thing is something called double time frame momentum, where the upper degree or the higher degree time frame is pointing in one direction and the lower degree time frame is pointing in the same direction. Here I'm using the weekly as the higher degree. That's what this green box down here represents. This is just saying that the green represents that the weekly is bullish, and we've just had this bullish reversal where the blue line goes above the red. So if you're familiar with momentum indicators, there's thousands of them. My favorite by far is the stochastics RSI. You can see blue goes over the red. It lines up with this low over here. Blue goes over this red. It lines up with this low over here. So it gives them some valuable information. Now, it's one of the 4 secrets that I teach. And if you want to become one of my students and really want to get closer to the fire, attend my live workshops on Saturdays, my private Telegram community, you can test out my education. I used to be a teacher by trade. I used to teach mathematics. Believe it or not, I got a math degree back in 2006. I used to teach students. But now it's all about making money, financial freedom. And if you want to learn how to read the markets, take my 4 secrets masterclass on how to make consistent money from the markets. If you like it, you can buy my courses. Massive discount right now. I break everything down from foundation, intermediate to advanced level. And you can learn at your own pace because it's video on demand. And then, this stuff that we're doing today will just make more sense. So that's free. It's in the description link below. So a couple of factors, right? We're going to do a couple of things. Why am I quite confident that this wave 4 is likely to hold? Right, let's just draw it like with a black line. I like to have it dashed just so we can see it clearly. Okay, well, we've got something called a wave 4 retracement. Right, what we do is we measure wave 3. So this is wave 3. Beginning of wave 3 is the end of wave 2. Beginning of wave 3 and the end of wave 3. Right, if we measure that, most wave 4s typically retrace 38.2 to 50%. Right, I'm going to click these ratios here. 38.2, which is 0.382, and 50%, which is 0.5. And you can see that it falls nicely into that range. Right, so we've got momentum, we got price, we got pattern, ABC. There's a few other guidelines, Most wave 4s complete at the former wave 4, and you can see like a double bottom forming over here, which is all good. So that's very, very healthy. So we'd like to see a nice continuation. Another thing that most people just are totally unaware of is time. How long things take to unfold, crowd psychology, how it kind of really typically plays out. So there's a nice thing that you want to know. When wave 4s are relatively simple, this is a simple wave 4. Like sometimes wave 4s can be complex and it goes on and on and on, and it's really just not a typical ABC. But this is like literally a typical ABC. When that's the case, how long wave 5s take is typically related to a wave 4. When wave 4 is complex, wave 5s typically take less time. And when wave 4 is simple, this is simple. Therefore, wave 5 typically takes longer. And that's what this red line represents. I've literally measured how long did this wave 4 take. It was like 1, 2, 3, 4, 5 days. So I've projected forward 5 days, which is over here. So typically, this is the 8th of November. The wave 5 should take a minimum of 4 days, but 4 days or more. 4 days or more. So it should be longer. And then last but not least, I'm going to finish on this. I've drawn some price ratios, right? Based on what most people don't realize, whatever you think about the markets, whether it's crypto, Bitcoin, Ethereum, gold, oil, foreign currency, it's all human psychology. It's fear and greed. And crowd psychology, applied crowd psychology is what we're doing here. Social sciences, what we're doing here is crowd psychology, and the crowd movements tend to be quite predictable in nature. Quite predictable in nature. So what we've done is there's a certain relationship with wave 3s or 1 to 3 and wave 4s. That's what these ratios are. So this is the typical minimum wave 5 zone. We're talking about 21 to around 21,500. This level here is around the 22,000 mark. And an overextension, a typical overextension, sometimes wave 5s overextend, is around 22 to 23,000. So we're going to be very aware of these Fibonacci ratio zones, especially if it's after the 4th of November. And we can then drop down to a lower degree time frame to see if it's unfolding into some type of 5-wave pattern. If it unfolds some type of 5-wave pattern, at the end of a wave 5, we will get really tight with our stop losses. So we want to get stopped out and lock in as much profit to the upside as we can. Very cool, right? So I love this stuff, right? It's just fascinating to me, but it just works. And it's the 4 secrets that you need to know. One by itself is powerful, but in conjunction with the other 3, then you have something called a confluence of events where you stack the odds in your favor. So if you want to become one of my students and really learn from me, I've been doing this for 15 years. The Forex markets, last 5 years, crypto markets, this stuff just applies incredibly well. And you can be 2 steps ahead of the market, knowing when to take profits, when to stand aside, when to be betting short. So you can short the market or just to be selling, and it's really, really important. So take the 4 secrets. Masterclass is free. It's in the description link below. Let's see how Bitcoin unfolds over the coming days. Let's finish on the quote of the day. I'm going to do it from my book. This one is one of my favorites, actually. It's one of my favorites. Chapter 5 is Leonardo da Vinci. Simplicity is the ultimate sophistication. I see people trade all the time and they overcomplicate things. And there's a gajillion different strategies and indicators and pattern signals, etc. I just keep it to 4. 4 is the magic number. I cover it in the masterclass, but today we saw the double time frame momentum, which gives us a good indication that the trend is up. So we want to bet on the trend continuing up. We've got price, we've got time, we've got pattern position, really, really important. So simplicity is the ultimate sophistication. Keep it simple, keep it concise, and keep it mechanical so you can repeat the process. That's really, really important. You have a strategy, which is your plan, and you can trade that plan consistently time and time again. So like, subscribe, hit the bell notification. We'll keep a very close eye on Bitcoin, especially over the next 4 to 5 days. And let's see if it does unfold and hit that 22,000 mark. And then we're not going to exit at 22,000. We'll trail our stop loss on something called a 1-bar low or on a swing low, because sometimes it just overextends and no one knows if it's going to overextend. But we want to be in the market if it does overextend, because we can make a lot more profit. And sometimes 5, 10, 20% of the time, crypto does overextend. So we're just going to allow it to unfold. All right, guys, see you soon.